Alright guys, in this video I'm going to break down two solid trade ideas from our Discord this week. One was a 150 plus point NQ gainer and the other a Bitcoin swing trade. Both trades were actually mentioned ahead of time and both delivered solid results. If you are interested, I'll drop the Discord link in the description below. With that said, I would highly recommend here that you stick around until the end of this video, where we will discuss how these setups played out and most importantly, why they worked out so well. Alright, so let's take a moment here to take a look at this specific section of the 5-minute NQ chart and try to figure out why I have brought it into focus. Now, this price action here isn't just some random spot. This is actually a key area that, despite its high probability setup as an area of interest, it's something that could have easily been missed by the untrained eye. And the reason I'm bringing this up is because whether you are new to trading or have been around for a while, it's very important here to train yourself to recognize key patterns and subtle signals in such areas. And this is really, I think, the purpose of this whole video, to help you develop this type of skill so you can understand why certain market movements stand out and how identifying these moments can be a game changer for your trades. So let's break this puzzle, if you will, down together. Now, as most of you who have been following me for a while know, is that the very first thing that I do when analyzing a chart is draw the range, because this helps me simplify the chart and gives me at the same time a clearer picture of what's actually happening. And again, it doesn't really matter if you are a noob or experienced trader. In my view, this is a solid starting point for every time frame analysis. Once I have that, I move on to figuring out where the market is currently positioned and where it might be headed. Now, to do this, ask yourself a simple but in my view important question. Is the market sidewaying or trading? Judging by this whole price action, we have been clearly trading sideways for quite a bit here. Now, this clue, in my view, serves as a guide for your next steps, which are, should you be in the market at all? And if so, are you actually looking to go long or short? Now, to answer these questions, take a close look at the market structure and supply and demand dynamics, because this will help you determine the market's short-term likely direction. For example, looking at this rebalancing move, we can see a clear sideways bias that, in my view, is definitely one-sided. Why do I say this? Well, because as you can see, after printing the session high, the market reverses sharply lower, obviously, almost nosediving. However, notice we don't trade below this short-term low here. Instead, the market retraces higher via an impulsive bar. It barcodes a little bit here, and then as it tries to push higher, fails to test, let alone break through the 260 level. This shows the market remains range-bound, assuming obviously that this structure over here hasn't developed yet. In other words, guys, our job at this stage is to monitor the market's progress as it works through its sideways phase. At the same time, here you should pay close attention to signals. These signals will come obviously in the form of key price action patterns, breaks of structures, block orders, and all that jazz that comes along with that. Imbalances, obviously. So you have to sort of figure out which signals will change in the direction of price, and eventually this change will guide your decision in terms of when to enter the market or not. Now let's focus on the highlighted area here, where we can clearly see the formation of a bearish order block, which in my opinion is the key player here, bias-wise obviously speaking, is the key player in this zone. The reason I'm emphasizing this is because if we look to the left of the chart now, we'll notice that this order block clearly qualifies as a solid one. Now, what makes a bearish order block a solid one? it's typically, in my view, always here, is typically marked by strong institutional selling, creating a clear imbalance between supply and demand dynamics. In this case, the market shows a sharp reaction to the downside once the block breaks below its base, confirming this way its significance. At this point, our thought process in the Discord was simply as follows: if the price breaks below the base of the order block, it signals a potential structural break below the 205 level. If that happens, we thought we can then expect a move towards the 190 zone, which, as you can see, aligns with the equilibrium point of our range here. Now, we saw this setup as offering a clear roadmap for anticipating the next market move. And let me explain here what I mean by that. If the price breaks to the downside here with the same supply or bearish strength as it did earlier, the trade would be off the table. Why? Well, because despite the plunge, our filters would not confirm a high probability entry on the short side of the market. However, our thinking was that if the price pulls back after testing the range's equilibrium point and then tests the order block's base but fails to break it, that rejection would confirm the area as a supply zone and signal at the same time a potential nosedive in the making. That's why I've marked this level as a key entry point. Clearly, guys, as you can see from the price action here, clearly the short was spot on as the market quickly reversed, leading to a strong decline, hitting in the process both targets. See, one thing I've learned, guys, is that if you are granular in your analysis, especially on time frames like the 5-minute or 15-minute, if you are granular in your approach, analytical approach that is, you'll get to use all the technical details you discover effectively and nail at the same time those high probability trades. All right, let's look into the Bitcoin trade next. Now, as I always stress, it's fine, obviously, to have a bias, but you should only enter a trade when your setup actually materializes. In this case, looking at the hourly BTC chart here, we had a confluence of both bias and setup, which is why this trade idea was shared in our Discord group. The idea was technically basic. After this liquidity grab at the top was completed, the price retraced into this thick order block before reversing and breaking the structural level here, signaling a potential bearish trend reversal. Ideally, though, a better entry would have been up here when the price retraced into this imbalance zone. However, due to volatility, BTC moved back and forth, as you can see, as it tried to stabilize before finally plunging lower. Still, I think the overall direction for the short trade was correct, with both imbalance zones down here serving as targets that were eventually balanced. Folks, you have to realize that trading, as per Wyckoff's method, it's all about spotting the underlying trends behind market action. And I do know that a lot of you out there get caught up in the moment, focusing on quick moves or price spikes. But you have to understand that the real key when it comes to us retail traders outmaneuvering market makers is recognizing the trends driving those moves. Think of it this way: while price action on the surface might seem random or chaotic, there's always a bigger narrative unfolding in the background. Your job as a day trader is obviously to identify that story, whether it's a shift in market sentiment, supply and demand imbalances, or larger institutional moves. Those trends are what actually shape the market. And now, once you get good at spotting those underlying forces, everything starts to click. And what that means is that you'll stop reacting to every little price fluctuation out there and start anticipating where the market is likely to go next. That's when trading becomes obviously less about you guessing and more about strategy. So don't just chase the immediate moves. Take a step back, look at the bigger picture first, and then you start if you apply this approach, you start training yourself to spot those hidden trends. That's where, in my view, the real edge lies in this game. And by the way, here, if you are looking to dive deeper into price action analysis, make sure to click on the next video. All right, gang, thanks for watching, and as always, hope to catch you all in the next one.